The New York Stock Exchange buzzed with excitement, its iconic facade draped in anticipation, as the world's financial elite gathered for a momentous occasion. Klarna, the Swedish fintech giant known for revolutionizing the way people shop and pay, made its long-awaited public debut under the ticker KLAR. The company's signature pink banners adorned the NYSE, signaling a new era for both Wall Street and the global payments industry. This IPO was more than just another tech company going public. It was a validation of the buy now, pay later model that Klarna pioneered, a business approach that has reshaped consumer finance and inspired countless imitators worldwide. Klarna's journey from a small Stockholm startup to a global financial powerhouse has been marked by resilience, bold vision, and relentless innovation. Over the years, the company has navigated regulatory hurdles, fierce competition, and shifting consumer habits, always staying ahead of the curve. CEO Sebastian Siemiatkowski's ringing of the opening bell was more than a ceremonial gesture. It was a declaration that Klarna had weathered market storms, adapted to changing landscapes, and emerged stronger and more determined than ever. Investors, analysts, and tech enthusiasts alike saw a unique opportunity to own a piece of a company positioned at the intersection of e-commerce, technology, and consumer finance, a rare blend that few companies can claim. The market's initial response was overwhelmingly positive, with shares surging and traders celebrating on the floor. This strong debut signaled a deep belief in Klarna's vision and its potential to shape the future of digital payments. Klarna's debut wasn't just a milestone for the company, it was a defining moment for the entire fintech industry, setting a new benchmark for innovation, ambition, and global impact in financial technology. Klarna's IPO was priced at $40 per share, already hitting the very top of its expected range, a clear sign of strong investor interest even before the opening bell. Anticipation was high, with traders and analysts closely watching every move, eager to see how one of the world's leading fintech companies would perform on its first day as a public company. But the real excitement began the moment trading officially opened. The energy on the NYSE floor was electric, with traders glued to their screens as the first orders came in. Klarna's first public trade soared to $52, a remarkable 30% jump from its IPO price. This immediate surge was a powerful indicator of massive demand and investor confidence in Klarna's business model and future prospects. By the end of the day, shares settled at $46.40, locking in a solid 16% gain. This strong close was not just a win for the company, but also for its early backers and employees who had believed in Klarna's vision from the start. With this performance, Klarna achieved a market valuation of $17.5 billion, instantly placing it among the world's top fintech giants. This valuation reflects not only the company's impressive growth, but also the market's belief in the future of digital payments and the buy now, pay later sector. The strong debut sent a clear message. Investors are serious about fintech innovation and see real potential in the BNPL model. Analysts noted that Klarna's success could pave the way for more fintech IPOs in the coming months. Klarna's IPO was carefully and strategically priced, rewarding early investors with significant gains while ensuring the company raised the capital it needed for future growth, without leaving too much value on the table. For Klarna's employees and stakeholders, the IPO was more than just a financial milestone. It was the realization of years of dedication, innovation, and teamwork, now recognized on a global stage. The day's success set a strong and stable foundation for Klarna's future as a public company, giving it the resources and credibility to expand even further. The market's overwhelming enthusiasm was a resounding endorsement of Klarna's mission to simplify shopping and payments for millions of people worldwide, marking the start of an exciting new chapter in the company's journey. Klarna's $17.5 billion valuation is a remarkable comeback from its 2022 low of $6.7 billion. At its 2021 peak, Klarna was valued at $45.6 billion before a market correction hit high-growth tech firms hard. Today's IPO is a testament to Klarna's resilience and ability to regain investor confidence. The company raised $1.37 billion in fresh capital, fueling expansion and innovation. This war chest positions Klarna to compete with rivals and pursue long-term goals. The valuation journey reflects market realism. Today's number is grounded in performance, not hype. Investors now focus on Klarna's fundamentals, its massive user base, merchant network, and path to profitability. Klarna's rebound is a story of adaptation and strategic growth in a volatile market. Klarna's core business is simple. Make shopping flexible by letting consumers buy now and pay later, often interest-free. With 111 million active users and nearly 800,000 merchant partners, Klarna has built a vast, sticky ecosystem. Shoppers love the convenience and transparency, while merchants see higher sales and new customers. Klarna pays merchants upfront, then collects payments from shoppers in installments. The company earns revenue by charging merchants a fee per transaction, a win-win for both sides. This network effect, more users attracting more merchants and vice versa, drives Klarna's growth. Under CEO Siemiatkowski, Klarna has expanded beyond payments into a full suite of shopping and banking features. Klarna isn't just a payment provider, it's reshaping the modern retail landscape. Klarna's IPO arrives at a pivotal moment, as the market for public offerings is finally rebounding after several challenging years marked by uncertainty and volatility. The global financial landscape has been shifting, with investors regaining confidence and companies once again considering the public markets as a viable path for growth and expansion. In 2025, an impressive 144 companies valued at over $50 million have gone public, a remarkable 53% increase from the previous year. This surge highlights a renewed optimism in the market, as more firms seize the opportunity to raise capital and expand their reach. Tech IPOs in particular have been a driving force behind this resurgence, raising over $12 billion so far. This signals a strong and growing investor appetite for innovation, especially in sectors like fintech, artificial intelligence, and cloud computing. Klarna's listing stands out as the year's most significant, not only due to its size, but also its potential to inspire other unicorns and high-growth startups to consider going public. The company's earlier decision to delay its IPO, prompted by heightened market volatility, ultimately proved to be a wise move. By waiting for more favorable conditions, Klarna was able to time its debut for a period of renewed investor enthusiasm and market strength. Klarna's successful debut is part of a broader trend, with other high-profile tech firms like Figma and Circle also making strong entries into the public markets. These companies are helping to redefine what's possible for tech IPOs in the current climate. For early investors and employees, the IPO provides much-needed liquidity, allowing them to realize returns and reinvest in new ventures. This influx of capital is likely to fuel the next wave of innovation across the tech sector. Klarna's perseverance, careful planning, and strategic timing have paid off, securing a higher valuation and a warm reception from the market. The company's journey serves as a blueprint for others navigating the complexities of going public. Klarna's debut not only sets a new benchmark for fintech, but also signals a broader shift in the IPO landscape, paving the way for more innovation-driven companies to make their mark on the public stage. Klarna's blockbuster debut kicks off a busy week for IPOs, signaling a wide-open window for new listings. Next up is Gemini Space Station, aiming to capture investor interest in commercial space exploration. Figure Technologies, focused on blockchain-driven home equity and mortgage lending, is also set to go public. Legence, specializing in sustainable infrastructure, rounds out the week, highlighting investor interest in green tech. Each IPO will test market appetite for innovation across industries. Klarna's success sets a positive tone, energizing the market for diverse new offerings. This flurry of activity paints a picture of a vibrant, opportunity-rich Wall Street. Despite Klarna's success, the buy now, pay later model faces growing scrutiny. Critics warn BNPL can encourage overspending and lead to unmanageable debt, especially with minimal credit checks. Consumers may not fully grasp the risks, and late payments can hurt credit scores. For providers like Klarna, rising defaults during downturns pose real financial risks. Regulators in the US and UK are considering stricter rules, affordability checks, clearer disclosures, and dispute processes. New regulations could protect consumers, but also increase compliance costs and slow the seamless checkout experience. Klarna must navigate these challenges to sustain its growth and reputation. As a public company, Klarna faces a tougher regulatory landscape worldwide. If BNPL is classified as a traditional loan, Klarna may need to implement stricter credit checks and disclosures, raising costs and adding friction. Operating in multiple countries, Klarna must juggle a patchwork of financial laws and consumer protections. Heavy investment in compliance will be essential to avoid fines and reputational damage. Klarna's proactive engagement with regulators can help shape fair, balanced rules for the industry. Responsible lending and transparency will be key to building trust with both users and authorities. How Klarna navigates regulation will be as crucial as its growth and risk management. Klarna's IPO is more than a financial win. It's a defining moment for fintech. The company's rise from Stockholm startup to $17.5 billion public giant inspires a new generation of entrepreneurs. Klarna has made flexible payments a standard expectation, forcing traditional banks to innovate. Its public listing gives it the capital to further embed its services in global retail. Investors will watch closely as Klarna balances growth, profitability, and regulatory scrutiny. A successful run on the public markets could pave the way for more fintech unicorns to go public. Klarna's story is about the future of money, where shopping, banking, and technology merge seamlessly. As Klarna enters its next chapter, its influence will shape how we pay, shop, and interact with our finances for years to come.